Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar just cannot seem to shake this bearish sentiment at the moment, with all the indicators still declining and also from the rejection that we saw on Friday at 79.75.85. The market is now crushing this support, which is the 60-day moving average at 78.12. A close beneath there from tomorrow morning at 7 a.m. would confirm further bearishness, and as you can see, the trend was initiated back here in December to the upside, and this could be the start of a new bear trend that comes in at 75 cents as a target if we close under there. The initial target for the day, though, is 77.45.65 with resistance seen at 78.45. Now, the dollar index has been, over the last 4 days, has initially been challenging the upside and gaining as it does. And in terms of the euro, you can see that since the bearish outside range day, or the flip side, the bullish outside range day for the dollar index has played the same role, with the euro now falling lower and now to the double top bearish reversal with the neckline. A break of 122 gives us 118, or in the dollar case, the rebound from 88 would see a break up towards 90.5. So in all cases, with also the MACD and the stochastic and the rest of the indicators are all supporting both sides of the coin, being bearish for euro and bullish for the US dollar. Now at 6 a.m. this morning, the FOMC minutes was released, and as it appears that the traders were welcome to the news from the statement that the FOMC had revised its upward economic projections as they made in the previous meeting in December. Now this was the last meeting for Janet Yellen, who has guided the Fed through the first rate normalization steps a decade ago after the financial crisis of the GFC. Now, Janet now gives the way to Jerome Powell, who would likely to gradually take her steps and keep rates in a slow pace, with one looking in March for a hike. Now, we have to keep an eye on inflation because the Fed will want to keep this a little bit on the slower case and not wanting it to rise too fast, so they may have to rate hike a bit sooner. At the moment, they're holding 3, but there is speculation of holding 4. So with the euro today, I'm looking at the support around 122.65.70 as it's being challenged now, and also lower towards the neckline at 122 figure 10. And as I say, a break beneath there will give us another 200 points, with the resistance seen at 123.45. And it would seem that the rebound that we saw on Friday at 105.55 for dollar yen reaches its target of 107.70. With room still to go to the region of 108.25, the market may start taking profit there. So be careful if you're long, because we might see some interesting turnarounds, but to be short-lived. Support on the day comes in around 107.35. Well, the pound is weaker and still is. Now, the reason behind that is that we had a couple of different numbers out last night, and one of them being the wage growth, which remains at 2.5%, matching the forecast. However, unemployment declined by 7.2 thousand, defeating its estimate of 2.3 thousand gain. The unemployment rate ticked up from 4.3 to 4.4. So now the market is now questioning whether the Bank of England may have to speed up its interest rate hikes. Nevertheless, at the moment, while they remain to stay on the back burner, we are looking towards 136.80 as a target, with resistance anywhere from 139.65 to 140.60. Well, the gold outlook is still weak and tumbling since the bearish outside range day, and as you can see now, it's fallen a whopping drop from 1,361 to a low this morning of 1,322. That was after the initial statement released from the Fed, but technically we are still looking to go lower towards the bullish foundations, which holds around 1,300. A rebound from there is anticipated, and we could see a move back up towards the region of 1,300. 60, but not at the moment, while we're still maintaining a bear trend. Silver still has some potential downward moves. As you can see, it did knee jerk up. I am looking down towards $16.20 before any turnaround. Anywhere from 20.40 should find initial buying and take profit if the market is short. And I do expect to see a recovery back towards the higher region of around about $17 an ounce. Wrapping up with oil, the market is still bearish, and since rejection from 62.5, I'm still looking towards the region somewhere around $59. And I did mention earlier that the weeklies are still quite heavy, and I'm still concerned the fact that oil can't recover. So my bearish view still remains to about $58, $59 a barrel. So that wraps up for today. Thank you very much for joining me, and always look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.